Band of Coders is excited to have you guys here. Appreciate those of you who trekked in from out of town. Appreciate you doing that. And then for those of you who live in the area, you're welcome. So Band of Coders is a web mobile development company. We're based here. We have offices in Argentina as well as Toronto. We develop for in terms of company size, small companies up to large companies, and in terms of industries, it's really across industry. And then we also do a lot of reinforcement staff offers. So we're really excited to have you guys, and I'll turn it over to Michael for the rest of the program, and enjoy. Thanks.
Thank you. Round of applause for Amazing. So pretty much this is just going to be casual, open forum. If you want to say anything during this couple presentations, feel free to speak up a little bit, raise your hand. We're going to have 3 presentations, one going over just kind of recently what's happened. There's a lot of craziness that's kind of been happening over the last month, and especially this last week. Then we're going to have Mike Casey go over taxes, because I'm sure a lot of people made a lot of money over this last month and a half. So he's going to be talking about how to avoid penalties, potentially, we'll see. And then we have a new member, JB, who just learned about blockchain just a little bit ago and was enthusiastic about it, and now he's going to present. He's going to be going over R3 and a little bit about what they're doing. And if you know anything about R3, you're more than welcome to participate. I want this to be a little active conversation if it deems fit. So I'm just going to quickly go over what's been going on. So I did this last night about 2:30 a.m. So if some of these pictures don't make sense and I forget why I put them up there, we'll just skip them. Okay? No big deal. All right. All right. So what's going on? Australia, they're about to auction off 25,000 Bitcoin. That was kind of interesting. They're about to do that, I think, in like 4 segments, or to whoever the highest bidder is. This guy still thinks he's Satoshi. Whether he is or not, I don't know. But now apparently he's trying to like patent something to do with Bitcoin or blockchain.
50 patents.
Yeah, who knows what this guy's doing? But this guy's also from Australia, so that's kind of cool, I guess. This is Craig Wright, by the way, and for y'all that don't know, he proclaimed that he invented Bitcoin. Okay. Actually, real quick, who actually doesn't know what Bitcoin is at all, or just barely heard of it? Okay. I feel like there's only 2 honest people. But real quick, so Bitcoin is, in real layman's terms, digital gold. Okay. Now it can be so much more than that, but we'll just keep it in layman's terms for now. And then when I say blockchain technology, that's thought of as the way to describe the underlying technology, database network that kind of makes all of this possible. Where Bitcoin is more of the unit of exchange. Okay, and this guy apparently is the one saying that he invented it, but he gave no valid proof, and a lot of people think he's full of crap. Okay. So Microsoft and IBM both are starting initiatives in the blockchain space with blockchain as a service. So now you have to learn your new B, little a acronyms. And one thing that's interesting about IBM is they want to incorporate IBM Watson somehow into their blockchain, like Lumix or whatever they're doing. I'm actually meeting with the Microsoft blockchain guy later this week, so I'll learn more about what they're doing. But they have some information out there. As far as how useful this is, I'm not sure, but it's interesting to see the big guys at least taking interest in the. Yeah.
Is the microwave blockchain guy based here in Atlanta, or is it just happen to be in town?
Yeah, I don't know. That's the guy I contacted with is definitely, he's a representative in Atlanta, but as far as my communication with the guy he's trying to set me up with, that might be through like the Google Hangouts or virtual. Yeah, I'll report back. So something interesting about North Carolina, apparently they're trying to make it where Bitcoin, and believe me, if anyone has researched this, please feel free to speak up, but they're trying to pass something where Bitcoin would be considered more of a currency and help avoid some of the penalties and regulation that has to do with maybe Bitcoin considered a commodity. And IBM is also one of the people really interested in this, so we'll see where that goes. U.S. Department of Homeland Security, they have $3.1 million to give away for funding blockchain activities, so like give it to companies or universities or whatever. They've already given away 600,000 bucks. This lady in France hates Bitcoin. Oh, and she's like a government person that's running for president in France or whatever. So that's kind of scary if she becomes president.
France is going to isolate itself out of it.
Yeah, this lady's like, no more Bitcoin. So, anyways, China. So you know what China's been doing? I hope China's been buying tons of Bitcoin. I thought this picture was funny, so I used this one. So China pretty much is responsible for probably 80% of the Bitcoin rise in price. I might be wrong. If anyone has an opinion, feel free to chime. But I think China's probably responsible for the price of Bitcoin somewhat doubling in the last month or so.
Probably it's the same.
Yeah. So that's what they're doing. Yeah. What else is China doing right now? Mining.
Huh? Mining?
Yeah, they're mining. They own like what percent of all the hash rates?
A lot, like most of it.
Yeah.
Like they collected.
Yeah, pretty much. China is a big player in Bitcoin. By the way. Yeah.
And should you distinguish between the Chinese government and people in China? So I would say the people in China are a big player. I wouldn't say the Chinese government.
Okay. Good differentiation. One thing that's some news about China. They just made the world's fastest or best, most powerful supercomputer that can do like 93 petaflops of like crunching a second or whatever. So this is apparently 3 times stronger than. Oh yeah, you know more about this. so is that right? 93 petaflops.
Yeah, somewhere around there. The big thing is
Yeah.
that supposedly they use their own processor for it.
That's the biggest part. They're not using Intel.
Wow.
So China is
Yeah,
off the
because
grid.
the U.S. government said like Intel can't sell to China anymore, and now China made a supercomputer with their own
So this
processor.
NSA possibly doesn't know what China's doing right now, which is kind of interesting. So yeah, so Intel was banned from selling China Xeon processors because they're too powerful, and now China's like, well, we'll just make our own, and they made better ones, apparently. So yeah, they're running like
Though I don't know if they stole any designs from
Yeah.
Intel.
Oh, yes.
They made
It's
the
very
processor,
possible. Very possible.
but I haven't seen the architecture.
What else? Oh yeah, and then the big news this last week. So does anyone know what Ethereum is? Maybe y'all heard of it. Ethereum is like Bitcoin, but it's not Bitcoin at all. It's like it's like a world computer that is set up to be more than just asset allocator. You can deploy code on this blockchain. Essentially, you can do cool things like make a decentralized autonomous organization, which this is the DAO. This is the biggest DAO still.
Still, yeah.
Uh,
Well, I don't know. They totally green. Totally green. So not really.
So pretty much, just a little backstory for people who don't know. Ethereum enables a lot of things. One of the things it enables are decentralized autonomous organizations. Those are called DAOs, DAO. This is essentially a company that isn't owned necessarily by anybody. So anyone can join it, anyone can back off of it. This one has a board of curators. You can have your DAO do pretty much whatever you want. Essentially, a lot of people just put their money in a big pot and hope for the best with this one. We're like, we're going to fund this guy. So Slockit, there's their little logo, was like, okay, are we going to get venture capital, or should we just make one of these DAOs and be like, you can invest in this DAO and then you can fund Slockit. So the DAO essentially was going to be Kickstarter or a venture capitalist firm that would fund different startups and different initiatives and then profit from it. And we're going to be talking a lot about this. So this guy's name is Steven, and he's from Germany. Stefan. Stefan Tool? Paul? Yeah. Yeah, this guy is an interesting guy. What we're going to be talking about this.
So how do you invest? Is it bitcoins or is it dollars?
You can't anymore.
All right. Let's talk about post June 17th or pre June 17th.
But was that the thing where like a lot of money was lost?
Yeah.
That was in the newspaper.
Yeah, unfortunately. So pretty much the way you invested in the DAO, to answer his question, you would send. So there's a time period where they were accepting Ether, which is the currency or the unit for Ethereum. So you would send your Ethereum, which you would probably get by buying Bitcoin first, and then exchanging your Bitcoin for Ethereum, and then you would send your Ethereum to this DAO contract, and then the DAO contract would send you back DAO tokens. Simple, right?
Off of it.
What?
Off of it.
Off of it?
You buy $100 and it will give you back 50.
Oh.
No.
So pretty much the exchange rate was 1 Ether, they'd give you 100 DAO tokens at the beginning. So that's like during the creation phase. 100 on yeah. So essentially, when you gave it an Ether, you're buying like shares in this future DAO. You know, the people were calling it like, layman's terms, like the new Dow Jones or whatever, but that's not necessarily a good way to think about it. But all right, so anyways, let's keep going. We got. All right, so this ended up raising, when it was all said, when you think about the peak price of Ethereum, $250 million. That's over 12 million Ether. And then June 17th happened, which wasn't that long ago. And does anyone decide to know what happened? Yeah, okay, DAO got hacked, all right?
Technically, well, the code was.
There you go. So that's funny. It's like when I heard that, it almost made me think, does that mean hackers don't really exist because, well, no, it worked just as designed. The code allowed it. Like, so that made me like wonder when people were saying it wasn't a hack. It's like, well, you found an exploit. Does that mean like if you find a vulnerability in Windows 10, it's working as designed? I should be able to get into your computer.
So I'll just say that's actually a valid concern because a lot of hackers get hit. What was the neo-Nazi guy? So anyway, this one guy, pardon? He hacked AT&T by basically going to a URL that exposed a bunch of people's usernames.
Oh, yeah.
And all he did was just change some things.
He iterated a number.
Right. Yeah, that basically
and then he went to
changed the
jail.
number.
And
And it wasn't really a hack in the traditional sense of just trying to exploit vulnerability. He just showed that they were exposing it, and he got prosecuted.
Yeah.
So it's really, it's coming down to an intent crime. Are you doing a bad thing kind of thing? So as opposed to, is it really a hack because it's acting as designed, right?
Yeah.
So,
So the way the hack worked, and this is real high level, I definitely have not researched deeply into this. Apparently 2 exploits were found where he could and let me stop right there and go back a little bit. At any time after joining the DAO, you could say, okay, I don't want to be part of the DAO anymore. You can split off of the DAO and take whatever Ether is left off of what you put in that hasn't already been invested in, and go on your merry way after a certain time period. So essentially, this guy split off the DAO, and then recursively called to take his Ether back out of the DAO, and then within that contract, he said, I want to take my Ether out of the DAO, and then within that contract, he said, I want to take. So he recursively kept bringing out more and more Ether than he had. So he found some crazy exploit that wasn't detected. And that's about as high level as, that's about all I've researched into that. But essentially, this caused a crazy panic. And then I found this picture, which is kind there's $250 million. Yeah, so yeah. Anyone lose money in the Dow? Maybe. We'll see what happens. Yeah. All right. Anyway, so
Haven't they kind of blocked now by using that kind of the same method? Some
Yeah.
of the founders are doing the same thing, but they're
They-
saying
they did a
trust
white
us,
hat
we're gonna
attack.
hold
So
to it.
yeah,
And
so
once we figure out what we just did, we'll give it all back to you.
yeah. So we're like really trusting a lot of things
Right.
right now. So like everyone who's like right here and here in this area, we're like really hoping this isn't on fire. Like we really hope hopefully we can get at least some of this back. Because a lot of us put a lot of money into this. We thought this was going to be awesome. And when we really probably should have put it in here. So pretty much, like to your point, okay, yeah, so we'll use the same exploit that the hacker used to secure the rest of the funds. But then, apparently, and this might just be like, conspiracy or whatever, apparently the hacker then joined that split and then took money out of there, and then the hacker joined back to that child DAO, so you keep making these child DAOs off of this DAO, and now they just keep hacking each other back and forth with the same exploit. So then people are like, well, why don't we contribute to the hackers DAO, give them Ether, and then split off of it and recursively take back what's ours. So to me, this seems like a big cluster. And it really, and to me, this exploit is so extreme that it's just a matter of time before more and more people discover it, where it seems like so powerful, this exploit, where you can just join child DAOs and split off of them recursively, that it's really going to need a fork in the code in order to, a soft fork or a hard fork, whatever, to really maintain it, where it can then be available to, all right, let's take all the money out of the DAO, none of it got stolen, we're just kidding, fork the code, and we're just going to give it all back. So that's what we're hoping. The people that invest in
Can
these.
you talk about why that's controversial?
Okay, so the controversy part about that is, okay, if we do it for this, are we just going to do it for every time there's a little incident? And then at what point do we cross, draw the line in the sand?
And then become the 2008 bailout, right?
Yeah, then it's like, but, so one thing I'd argue about the difference between the bailout and this has to be consensus. You can't have 10% of the miners or 50% of the miners say, okay, I think we should bail them out. You have to have at least 51% or else this won't work. So that would be the one difference. But yes, to a certain point, then you're getting rid of that minority group that,
Yeah, I take your meaning. It's just that
Yeah.
if the miners do decide to do this, then it signals to the rest of Ethereum holders that they can't be trusted for the next time. And maybe they should sell and all that, right?
or maybe the miners are reasonable and I feel more comfortable because Ethereum is so open that we're going to find different vulnerabilities. I don't want to lose everything. So that would be the other argument against that.
You just don't know.
Yeah.
What it casts a doubt on is the future of smart contracts in
Yeah.
general, because you can't say that a smart contract is going to be 100% totally trusted yet. It's just too new.
Another interesting thing is when the hackers stole all this money. So by the way, let's keep going. Oh yeah, so that was the price of Ethereum before the DAO hack, and you can see it went down a lot. And then Vitalik, the nerdy white guy, said like, oh, we're going to fork it, and then power covered, or there's more like talk about this is probably
Also, toward the end there, Bitcoin kind of cracked down.
Oh yeah, that was today. That was this was as of yesterday.
2:30 in the morning.
Yeah, this was as of 2:30 today. And then here's Bitcoin, and it kind of dipped. And my original thought with this was a double thing. It just went up in crazy as far as the value. So I thought this was a correction plus the fear that perhaps the person who exploited the DAO would then trade his Ether for Bitcoin. So I thought maybe it's potentially like a two-part, cost for the downslope.
I think it's also has to do with Brexit.
Yeah, that's
Say again?
The UK,
Brexit.
Britain exiting.
Oh, Britain exiting?
Or the EU.
That would
Just
probably
because
be
it's what you
pretty
saw
bullish.
happen after Joe Cox was murdered on Thursday or Friday. Bitcoin was surging, and finally it's retreated pretty significantly when they've come out and said that
Brexit.
likely
As an event, it would be pretty cool.
Somebody who's working.
So I think a lot of people were throwing money into it, worried that Britain was going to end up leaving the EU.
And now they're not.
Most people, I think they're going
Are we
to.
talking about the MP that got murdered? Is that?
Yeah, I think
Joe White is,
All right, so pretty much what I was going over earlier was all this as far as saving this guy and some probably developers who also put into the DAO. It's really these guys, and the reason I didn't put them in all the way to the right or left was because I think it's just majority of them kind of support it from what I've been reading. But pretty much you need at least the majority of the miners, or at least the mining pool hash power to be willing to say, okay, we're gonna refund everyone's ether essentially put into the DAO. So it's really these guys that determine that. So now you're gonna have the developers like Vitalik make the code change or whoever, and that's not necessarily a totalitarian like you must do this. It's really democracy as its purest form because you need 51%. But then you have a lot of people like this that are like, I didn't invest in the DAO. Y'all messed up. And then I named them Team Spoon because I thought that was funny. And then this was my research that I found a picture I just put up there. It's like, 80% or so of the miners support forking. I was like, oh, that sounds great. All right. And that's all I had for recent news. Did anyone else want to talk about anything else recently that's going on in blockchain space before I pass it on?
What was that context around the exit? The EU exit?
Did you want to go over more about Britain exiting?
No, I mean, I don't really know what correlation it's going to have with the blockchain, but I just saw a correlation between just the sentiment. People thought that they were going to be leaving this time last week.
Oh, Britain exiting the EU. Okay,
Yeah, Britain
that's
exiting the EU.
Yeah.
Yeah, sorry, I said Britain exiting the UK at first, but yeah, the EU.
Yeah, at first I thought they were saying like a big
Right.
company like Bittrex or also.
No. No, I just think that the fear subsided and people stopped investing in Bitcoin.
All right.
Oh, okay, gotcha.
Okay, that's all I had for recent news. We're gonna have Mike talk about taxes.
Oh, joy. Yeah, sorry, I apologize, guys, because this is going to be nowhere near as entertaining as my presentation.
Clap for Michael.
Let's see. Where did you send it to me?
I sent it twice, so click Google blank here.
This is all being done. Boom. Download. Oh, just kidding. All right. It was. That's fine. And then you did. And then just right arrow clicks.
All right, this is on digital currency and taxes, and basically the tax treatment, if anybody here. So how many people here own digital currency? Oh, wow, how many? Pretty good. Like, just to show of hands, how many of you own Bitcoin? How many of you own a currency other than Bitcoin? Cool. All right, okay, so very important. I don't know how long you've been holding on to it, but the tax treatment of Bitcoin is a mystery to a lot of people who don't. They don't really know what's going on. So I want to demystify that a little bit, and also, I don't want to sound too much of a warning cry to it, but I want to make sure that everybody knows what the tax rules and obligations are so they can treat it accordingly and maximize their profit and avoid the penalties. First thing I want to say is I'm not a lawyer. I'm not a lawyer. I'm not a tax accountant. Don't listen to anything that I have to say, pretty much. Because seek professional legal advice for anything, because I could be completely full of it.
Hey, Mike, are you a lawyer?
No. Are you a lawyer? Yeah. Thank you. All right. So, just this is not any sort of advice on what you should do. This is just a little bit of an informational session. Tell you the world as I see it. Okay. So why would you want to pay taxes with digital currency, right? A lot of people say that, especially those in the libertarian persuasion. I don't have to pay taxes. Well, a fact anonymous. A lot of people think it is. It's actually pseudonymous. And if you go to an exchange, they, like a U.S. registered exchange, you can pretty much operate under the assumption that they will keep your personal identification that you provide them in perpetuity, and they will eventually report it to the IRS. Now, and keep in mind, as for the IRS, there is a statute of limitations on 7 years for mistakes. But if you are found to be intentionally committing fraud, then there is no limit to as far back as they can go to prosecute you. So just keep that in mind. So another thing, the blockchain keeps records forever. So anything that is tied to you pseudonymously, so if they can tie a transaction to you, and they can do a lot of analytics on those transactions to determine where the money flowed from there. Once they do that, it's there forever. I put an asterisk there because there are techniques like sharding and that we can potentially dump old data that we don't need. But for all intents and purposes right now, if you execute a transaction on the blockchain, it is there for good. And so you have to keep that in mind. So yeah, as I said before, the exchanges, they're forced to keep AML KYC information on you. They have to file SAR reports if you move over $10,000, stuff like that. So the SAR is a suspicious activity report. They are required by law to file those with the government if you move a large amount of money. That will be tied to your name. They know you're doing it. Right now, as of right now, they haven't done any tax crackdowns, but I guarantee you if current trends continue, they will be filling out some sort of new 1040X whatever form that they send to the IRS from the Bitcoin exchange. They already have all of your information. So just keep in mind that it could and quite likely will happen. So if you sell or spend your Bitcoin, that constitutes a legally taxable event. So so as soon as, the most important thing to remember is if you buy Bitcoin, you're not taxed on that at all. Or, I say Bitcoin, but this is true of any digital currency. Bitcoin was just the most popular, the first one. But if you buy or sell this digital currency, if you buy it, then it's that price that you buy it at. I'll actually get into that later. But it's only a taxable event if you sell or spend it. And you can spend Bitcoin at that point in time you are taxed. But until then, feel free to buy as much as you want. You don't have to tell the IRS boo.
Question.
Yes, sir.
What if we constantly are buying, selling, and then giving away small amounts of Bitcoin to random people, and then we just don't keep track of any of it? Are we going to be responsible if the price goes up if we don't actually own that Bitcoin anymore?
It depends. You asked several different scenarios, and I'll get into tax treatment of those scenarios later, specifically selling versus giving away. But yes, you could be potentially liable if you have an event, a spend or sell event, when Bitcoin is ridiculously high and you do not pay your taxes, then you could potentially. So say if Bitcoin went up to $10,000 and you spent a bunch of it, but you spent all of it, and you did not save any of it to pay your taxes, and then all of a sudden it crashed down to zero, and you no longer have any Bitcoin. You now are left with a whopper of a tax bill. And, so you'll have to deal with the IRS at some point about how you're going to settle that. But, I don't know if you'll have to pay the whole thing or installments. Yes?
So if you lost money on the Dow, can you count it as a gambling loss?
Deductions are a real thing. But, okay. So last one, if Bitcoin does moon, if it goes to the moon, you guarantee the IRS will be all over that. Right now, it's still very small, relatively speaking, for the larger economy. But if the price goes up to a certain level, they will take it seriously. Right now, they don't. But again, go back up to the top. It lasts forever. Yes.
What's your dollar value for Moon? What does that mean?
My dollar value?
What's your personal dollar value?
My personal dollar value for Moon is measured in U.S. median priced houses per Bitcoin. But that's just me. All right. So
is this different than any other collectible? Like if you get
yes,
baseball
it is
cards?
not a collectible, and that's actually a very important point. And I'll get to that later. It is not a collectible; it is an asset, which is different than a collectible. Collectibles are actually worse, believe it or not, because they tax you more. Okay, so there's two types of ways you could incur a taxable event in Bitcoin. First and foremost, nearest and dearest to my heart is speculative investment. And that's you buy Bitcoin with the expectation of later retrieving its value by either selling it or purchasing, using its purchasing power for an increased gain in your monetary purchasing power. And the other way is to mine. So let me go back to mine really quickly. So that is by the process by which Bitcoins are manufactured. It's pretty much infeasible now unless you have $10 million worth of capital for equipment and free electricity. So other than that, you basically can't do it. But back in the day, a lot of people made a lot of Bitcoin mining. Bitcoin was worth nothing, but relatively. The mining though is counted as income, and also this is digital currency, not just Bitcoin. So there's Ethereum that you can mine Dash, and several other currencies right now that's still active mining because you can actually afford to mine at a reasonable price with a regular computer or a GPU, and decently compete in the market to earn it. So the IRS treats mining income as just that. It is income. You are paid that for performing a service, in this case for the network at large. So you're paid this money, right, in the form of digital currency. They actually classify it as an asset. But because you're paid this asset like any barter transaction, this is income you're being paid for working something. So you're paid something of value. You incur income at the time of reward. So at the time you get your money, that's the price of the digital currency that you receive from the mining event. That is considered income. You throw it on top of whatever you make at your job, and you're taxed on it at the normal rate. And of course, like you can deduct your expenses for hardware and electricity because that's an expense against your earned income. So because you're now using it as part of business. So that's nobody really does that anymore. And if you do, you're probably not going to make that much money off of it like you used to potentially be able to. And even then, you didn't make much actual taxable income off of mining. It was very small and you still did money. But if you, I don't know, maybe some here runs. Does anyone in here run a Chinese mining operation? No, nobody. You want to hit it? Yeah. Okay. So back to the speculative investment. So this is actually, I consider this to be good news. Speculative investment is not treated as money, because that would give a slightly different treatment if it was treated as a currency, like foreign currency, like the euro. But it is treated as an asset and has been classified as such for at least 3 years. So basically, that means you're subject to capital gains taxes. And it's a taxable event, again, not when you purchase. You don't have to worry about anything when you purchase. But as soon as you make your first sale, you have to record that and are obligated for the IRS to actually record that event and pay your taxes on the profits. Yes, sir?
What will happen if you're selling your dollars? Like, you're using dollars to buy Bitcoin? Like, isn't that?
You don't sell dollars. Dollars are actual, they considered currency by you only buy with dollars. You can't sell dollars. Yeah. Yeah. But remember, because dollars are considered money according to the IRS, and Bitcoin is considered an asset. As you mentioned, sir, it is not a collectible. Collectibles have a different tax treatment. They actually make you pay more on those. Yeah.
Is treatment basically akin to holding securities?
Exactly. Well, for the most part, there's a couple caveats because there's some interesting little wrinkles in that. But yes, it is essentially like a security, like a stock. It is treated as such as if you bought stock, according to the IRS. So let me continue. I'll tell you a little bit more about capital gains. Capital gains are the types of taxes rich people pay. So I remember Mitt Romney was running for president last time around, and I remember he released his IRS funds, and he was very proud that he paid 15% in taxes. He was really proud. So I know people who do their own taxes in here. Does anybody here pay as low as 15% for their income taxes? Anybody? I don't want it.
I don't earn income.
Oh! He got you.
He pays less than
He got you.
He pays less. Or more, depending. It's kind of a Schrodinger thing. But capital gains are people who have wealth, not money, but wealth. They don't pay income taxes because they make no income. It makes no sense to make an income. Why would you pay yourself when you can take a gain on the profit of your assets? It's way cheaper. So the difference between short-term, okay, that's the first thing. It's only taxable. There are a lot of misnomers about the tax code. We have a progressive tax system, but each bracket you only pay on the amount that is you earned over the last bracket. So when you say my tax bracket went up, it's not your total tax bill that goes up by X%, it's the money that made additional. So it's a bracketed system. So short-term capital gains right here, they are equivalent to income tax. So the one thing that I would tell you is if you do buy some digital currency, unless it blows up ungodly and you're afraid you're going to miss the profit, keep it at least a year. Tax treatment is so much better if you keep it a year and a day than if you keep it for 364 days. So if you keep it for a year, if you don't keep it for a year, you're on short-term capital gains taxes. That means it is income. That means you take your top tier tax bracket of what you work at your job, and then you throw that on top of that, and you're taxed at that rate. And I will show you these rates. They are ugly. Okay, but long-term capital gains, much better treatment, okay? For pretty much any of us, unless you're rich, unless you're already making boatloads of money.
What does that mean?
I will show you on the next slide. It's typically 15%. So 15% is a lot less than the marginal tax rate of probably everybody in the room with the exception of you. So okay. So next, going into cost basis. This is how your taxes are determined. Because remember, at the very top here, it only is the increased value tax, right? So when you sell your Bitcoin, you are not taxed on the amount you sell for necessarily, unless you bought it really cheap. But you are taxed on the amount you made over. So say you bought a digital currency at, $661? And it went to $10,000. Or, well, let's say it went to $1,000. It's only the $339 that you made in profit that you were actually taxed on. And then they apply the tax rate of 15% to that amount. So it's not the entirety of the amount, it's akin to, as you said, securities, but also it's the same thing as if you're selling a house. So with other caveats, because you have a grace period, a couple of years. But yeah, if you sell a house for profit, you don't reinvest that profit in another house, this is what you pay as capital gains. But you only pay it on the amount over what you originally paid for that house. So, right. Alright, cost basis. So that's, yes sir.
I have a question. On the short-term thing, what's your opinion on the traceability? If you buy, let's say, on Coinbase, they have your information, and then you send those Bitcoins to a foreign exchange that you don't have.
If you send it over the blockchain, if it has touched an exchange, eventually the IRS will hire a data analyst that will come to the blockchain and tie it to the
But they
records.
cannot prove that you sold it at the exchange.
Well,
You can say you've transferred. And
If
they've
the
got it
exchange
back.
is registered, they can, because they can force the exchange to give you their records on your account.
A foreign exchange that doesn't have anything
Well,
to do with it.
it depends. I mean, there's always loopholes. There's always ways around it. I can't, as again, I'm not a lawyer, I cannot comment on the feasibility, or I can only say, there potentially are quite a few ways around wanting to pay your taxes or wanting to acknowledge that you have taxable earnings. So yeah, it is conceivable that there are ways, hypothetically speaking, that you could hide your assets and you could actually sell them for profit and not have. So I will remind everybody currently, as much as I've tried to scare everybody intentionally, currently none of the exchanges send documents to the IRS as far as a formal procedure. Currently that doesn't happen. That's not to say it can't happen at any point in time. And as I said, they're required to keep records for a very long time. So I would be very aware of assuming that's going to continue in the future.
No, but they do send documents to law enforcement.
Yes, they
all
do.
the time.
All the time. So, and government agencies share.
Really?
And sharing is caring. So, all right. So getting back to the cost basis stuff. So that amount is the amount you bought the Bitcoin for. There are a bunch of different types of it. You don't, as I said, you don't incur a taxable event until you first sell it, and that's when you're required legally to tell the IRS that you've recognized the earning. Is that the tax year when you file, right? So until you actually sell it and create a taxable event, you don't have to say boo to the IRS. You do not have to establish a cost basis. The second you actually have to establish a cost basis, just pay attention when you go to do it because it is permanent. They do not allow you to change it. And there are some people that say, oh, well, and it's true, if you create a cost basis where you do on an individual transaction, but you incur the cost of keeping track of all of that, and that can be very, very time consuming.
That includes if you buy something with Bitcoin, like online?
Correct.
Okay.
If you buy this taxable,
That's a sell?
that is a sell,
Okay.
as far as the U.S. government is concerned. And then, so I want to talk about gifts. Okay, so if you give Bitcoin to somebody, it actually transfers your cost basis for that portion, whatever you've chosen it to be, to that person. So they are now legally obligated to pay the taxes on their earned profit from it above what you paid for.
Only if they sell it.
Only if they sell, correct. So or spend, but yes. So if you give it away, it's not like you incur an additional tax burden by giving it away. They incur the tax burden, but only when they sell. So, it can be a true gift. So that's good to know. All right. So the types of cost basis. The major ones are first in FIFO, which is first in, first out, and LIFO, which is last in, first out. I'm stuck with FIFO because that's the default, and that's what I elected when I did it. I actually like FIFO. A lot of long-term traders don't like it because you actually do end up paying higher taxes a lot of times. But for me, the incentive, because I'm first in, first out, and I've had a okay gain over the last 4 years in the Bitcoin that I purchased, that I'm okay with that because it actually provides a disincentive for me to actually spend the Bitcoin that I have. Because I know every time I spend Bitcoin, I'm going to have to pay roughly 15% extra over what I spend in taxes. So to me, it's like, okay, well, maybe I'll keep the Bitcoin. Maybe I'll spend something in dollars where I don't have to pay anything, and then I'll buy new Bitcoin. For me, that doesn't change my cost basis because I have yet to burn through the original purchase. So that's my tax, what I'm stuck at. There's also LIFO, which is last in, first out. And last in, first out is when you, the last thing, so say I bought it a month and a half ago and it rose $100 since. So say that actually happened. But, so if I wanted to cash back out, if I were using LIFO, if I wanted to cash back out of that, I would create an instant $100 profit, which would be a taxable event. But remember over here, it would be short-term capital gains taxes because I bought it last month. So on mine, because I'm FIFO, I always have over a year, anything I sell is going to get the nice capital gains tax treatment. So I like it. You can also do an average cost treatment, and that just takes the average that you paid for it. And there's actually numerous amounts of other more detailed ways that you can do it, but I don't want to get into that. Yeah.
Is there a limit of time that you can use to compensate a loss?
Well, yeah. So I will get into that a little bit. Okay, so that's probably a good time to talk about. So, I didn't, I was trying to keep this brief. This is actually going, so there's a couple of things with Bitcoin that are interesting. You asked, sir, is it treated like securities? Yes and no, because there's a couple of little interesting things that have yet to be defined by the IRS, and I'm not saying you should. I'm not saying you should. But the IRS has left a couple things undefined. One of them is explicitly wash sales, which is what your question was referred to. So say Bitcoin took a nosedive and you want to take a loss. Early in the year, you sold a bunch of Bitcoin at a profit. And so you have now this massive capital gain you have to pay taxes on. So there's a law that prevents wash sales of securities like stocks. So it says, hey, if it increases and you take it, at the end of the year, go to sell it to offset your loss and then immediately buy back in because you've now created a sale event and a new purchase. Those two events, if they're within a certain period of time, are a wash. So it's as if you never made the sale at all as far as the IRS is concerned. But that law only applies to securities. And Bitcoin is not classified as a security. It's an asset. So strictly speaking, the law as is could be interpreted to say you're totally allowed to do that. It kind of goes against the spirit of the law, but there is also letter the other thing that has that little caveat to it would be trading separate digital currencies. Again, so as I said, a digital currency is an asset. If you trade one asset for another, it is a barter situation, and all barter situations are taxes if you pay cash for the of the asset, right? So this is really fascinating, I can tell. But so in the barter situation, you can have if it's like kind. So if I have a bar of gold and I trade that for another bar of gold with somebody, then that is a like kind transaction, and that means it is a non-taxable event. If I traded you an asset for an asset, it's the same damn asset. There was no exchange. So since the IRS has classified digital currencies generically as an asset, if you trade one digital currency for another digital currency, who's to say if it's a like kind or not? I don't know. The IRS hasn't clarified that. So I can't tell you if that's a taxable event or not. That's up to you to decide. But that's another way that it is, strictly speaking, very different from securities. Those are the two things that I wanted to talk about. That answer your question? Okay. All right. So I want to go, okay, so here's the long-term capital gains. I believe Michael asked about this before. So on the left-hand side here, you see this is our ordinary income tax rate, the Joe Schmo income tax rate that you and I pay. Sucker working our day jobs every day. And as you can see, once you get up to about $37,000, you're taxed at 25%, and it just goes up from there, capping out at close to 40%. And that's if you make a somewhat large amount of money. So even you know, I consider you to be relatively well off at the 33% mark. That's doing pretty good. So the same amount of money over in long-term capital gains, right? It is, you know, and it's important to remember this is on top of your top tier income. So this is the brackets on the right-hand side is in addition to your income. So you add it to the top of that. That tells what capital gains you pay for your assets. So as you can see, I would consider you to be doing pretty damn well if you make over $415,000 a year. So at that point, anything over that amount, and this isn't anything under that amount, but anything over that amount, you have to pay 20% on. Anything under that amount, so say you made a paltry $350,000 a year at your day job, and you sold $50,000 worth of Bitcoin, you would still only pay the 15% rate. So as you can see from a tax treatment, owning an asset such as a digital currency and having it increase in value versus you working for the money yourself like a sucker is definitely the way to go. Plus you don't actually have to work for it. So if you want to pay your taxes and are interested in paying your taxes, it's a lot of paperwork if you try to do it yourself. It's really, really, really gnarly because you have to keep, if you buy on an exchange, then you have to look, because you'll be trading with multiple different partners. And so you say, well, okay, the price was, 10.75 here and 10.78 here, and then and then you keep going on, and you have to keep track of all that and come up with a rough out average of what it ends up as. But me, for what I do for all of mine, is I like to stay on top of my taxes. There's an excellent resource called Bitcoin.tax, and it's phenomenal. It's a phenomenal service. The premium, they have a free version, but you're going to want to pay for the premium if you do any significant trading because it gives you so much more functionality. It's only $20 for a year, and supports all major exchanges. You can import the data, in some cases directly via an API, or do an export from it, load it into it. It gives you all of the information into it. It calculates your cost basis, gives you multiple options for choosing your cost basis, and tells you how much you're going to end up paying before you actually choose it. It is actually, it's phenomenal. It makes it so much easier. Then when you're done, you can actually, if you pay for a premium version of TurboTax, you can actually export a thing in TurboTax format and import it directly into your file. No fuss, no muss. It's really easy. As easy as anything makes with taxes. But, and also, if you're paranoid about your holdings and you don't want anybody to know the information, they are not a bank, they're not a fiduciary, they're not anything. They're not registered with any governmental agency, and they make a big fuss about, hey, when you say to delete your stuff, it is gone. It is off our servers. If anybody comes and subpoenas us and say, it's gone, we don't have it. So they will keep it for as long as you want to keep it on. You're allowed to back up whatever you want, keep your own personal records and re-import them at a later time, but you can delete your account. And they say, if it's deleted, it's gone. So that's pretty much it. I highly recommend the service. I should put a referral on. But, that's okay. Do we have any questions?
So the moral of the story is buy your Bitcoin from local Bitcoins and stay off the grid.
The moral of your story is